Hi and welcome to the August Mortgage Update. My name is Richard Purnell. For those that don't know me, I've been a mortgage broker for over 20 years and specialise particularly in the buy-to-let mortgage market, working with landlords who are either just buying the first or perhaps getting into the hundreds, which we have a very small select group of landlords that have managed to achieve that particular objective. I'm also a portfolio landlord myself, so as are a number of the team that work alongside me. So we can also sometimes, if it's relevant, throw our two penneth in the ring about issues more from a landlord perspective. As you imagine, a lot of these issues overlap from being a mortgage advisor to a landlord. So that can sometimes be useful to some of our clients. Anyway, let's get straight on with this mortgage update. First of all, under the Market Watch, we're going to quickly refer to the Bank of England. They met at the back end of July and again unanimously voted to stick at the 0.1%. So the fact that it was unanimous gives us an indication that rates are not going to move anytime soon, because clearly mortgage rates have, if not a direct connection nowadays, are influenced highly by what the Bank of England are thinking. So despite the upward inflationary pressures, they are deemed to be sort of temporary in nature. I think particularly with leaving the EU, that's expected to quieten down. So the Bank of England keeping rates the same. So good for mortgages. However, let's move on to something that the regulator has been doing. So that's the Financial Conduct Authority. So they have done a nationwide survey of all lenders, banks, building societies, and other lenders. And the thing that has really stuck out with the regulator, so is in respect to defaults. So lenders are expecting a big spike in defaults in this next sort of 2 quarters. The reason for that, well, we've got the furlough scheme coming to an end next month, and obviously the self-employed grants also ending. So sadly, that has been a safety net for many households, many businesses, and as a result, defaults are expected to sort of spike quite significantly. And clearly the consequence of that are higher repossessions. As a landlord, of course, that may mean there's opportunities. And as we therefore anticipate property prices to reduce slightly, then there may be opportunities for those of you that are still active in this market. Looking at the mortgage rates for buy-to-let more generally, rates are still being cut here. Again, despite the Bank of England rates not changing, it may well be around wholesale finance rates coming down, and that in turn is being passed on to you as the customer. But a few lenders that are standing out here, a couple of building societies, Skipton Building Society, Accord Building Society, they've cut rates by 0.5% on some of their products and 0.38%, which is a big, decent saving for lots of landlords there. There's another company called Zephyr. You may not have heard of them. They're not a high street name, but if you're a portfolio landlord, then you're their bread and butter. And they've been cutting rates by around 0.25%. So some decent bargains to be had for those landlords that I say that are still looking to get some mortgages. Now, the Mortgage Works, TMW, for landlords that have been active for some time, they've been out in the market supporting landlords for years now, owned by the Nationwide. They still have probably the lowest rate in the market at 1.39%. So it sounds staggeringly low. Never such things as a free lunch. You should know that with the banks and building societies. So there are fees attached to that. But that's 75% loan to value. This is for personal rates, by the way, not limited company. And of course, you may or may not be eligible. So make sure you speak to your broker about that particular product and see if you may well be eligible. Something else I've noticed whilst looking at mortgage rates, and that is the overall loan to value limits that might be available. Generally speaking, as landlords, you guys tend to want 75% loan to value. I'm being sort of stereotypical here, you know, clearly individual needs, but 75% is not unusual at all. However, more recently, more lenders are now offering 80% loan to value mortgages. And I counted about a dozen lenders when I looked while putting this presentation together. And that's clearly good for competition. And there's some pretty decent rates. I think they were starting around 2.5%, 80% loan to value. So that's definitely worth looking at if you buy in. So do you want to keep that extra 5% in your pocket? Or indeed, if you're refinancing, well, is it worth refinancing to 80% compared to 75%? Definitely worth a look. Again, have a chat with your broker, see if they can do that extra bit of research so that you've got all that information to make those decisions. Finally, on this page, bridge to let deals are improving. Again, I think it's competition that's driving that. And so that's good for those landlords that are looking for bridge to let deals. Now, what are those, you might be asking, if you've never availed yourself of such a product? Well, as it happens, that's my spotlight for this month, to just expand a little on bridge to let products. So first of all, we're talking about a property that's not fit for letting. So if you're stood in the kitchen of this property looking to buy, you look up and you can actually see the clouds, see the stars, or it's raining on you, then clearly it's not fit, is it? It's not fit for letting. It's in a very tired state, and you're not going to get a traditional buy-to-let mortgage at that point. So you're going to need some form of bridging product to facilitate the purchase. So clearly, I'm not talking to people who happen to be cash rich. Happy days, get on with it, buy it cash. So assuming you still need some form of finance, then you've got this bridge product initially to allow you to get the keys and get in there and do the renovations you need to do. As it says here, it's suitable for family lets as well as HMOs, so that's good. You can have it up to 12 months. Now, clearly bridging, the second you draw down the money, the clock's ticking, it's costing you, you want to be getting in and getting out of your bridge as soon as possible. So 12 months, hopefully you don't need such a period of time, but you never know, it could be quite a significant project. There may be planning consents, approvals required as well that delay the whole process. So that's good to know that 12 months is available. So you can borrow up to 75% at the point of purchase. So this is on the bridging side of things. But then the second part of this product, and this is where the to let part of bridge to let comes in, is that the same lender is already putting in place the second long-term buy-to-let mortgage for you, so that when you're paying off the bridging, you're simply moving across into one of their buy-to-let products. So again, obviously, if you're looking to sell once you've renovated, this isn't for you. This is for someone that wants to retain the property and build that portfolio. And a couple of good points on this is, one is that when you move into the buy-to-let, this particular lender will offer 80%. So that could be good to pulling out all your original investment and indeed your renovation money, so that you've got all the money back to move on to another property, which is absolutely vital if you're trying to build your portfolio and you're in that build phase. The other really important point is that when the refinances are being done, they will look at the current open market value. That is a massive point to note. So you've added some value to, because of the renovation work you've done. The price is now higher than the original purchase price, and therefore if you want to pull out 75 or 80% of that higher value, that's going to make it that bit easier to get all your money back out of the project again. And finally, having such a product all under one roof, it will save some money, by the way, which is obviously always welcome. But also it allows us to plan as a broker and as you as the client to line up all the various elements before you're even purchasing, so you know exactly what's involved, and clearly the lender does as well, and it's almost pre-approved as you go. So a fantastic little product for those that are doing those types of projects. If you want to know more about Bridge to Let, then at the end of this presentation, there'll be all our contact details. And indeed, if you want to make an appointment with one of the team just to chat it through, then make sure that you can copy down those links. Okay, finally, I want to talk about life insurance and a really specific point, and that's about putting life insurance into trust. If you're unsure about what I'm referring to when I talk about trusts, then that probably suggests that your life insurance policy is not in trust. If in doubt, grab your hands on it, dust it off, and have a read through to see if it is in trust. Again, if you're still unsure and you want to send us a copy of it, screenshot it, send us a copy of the PDF, we're more than happy to take a look through and give you some feedback on whether that is or not. Why should you be bothered? Why should you put 5 or 10 minutes into checking this out? Well, 2 reasons. Firstly, if the whole point of life insurance is that if the worst happens, and if the worst happens and you need to claim on your life insurance, then if it's not in trust, sadly, it goes into probate. And that means it gets stuck in there whilst the executor's working through that, through the whole will, organising all the finances. And only when probate is granted, a phrase that you may have heard before, only then are the monies released to the beneficiaries, the people that need it. And I've heard so many nightmare stories, sadly, where this can take not only months for that to happen, but can you imagine years? And if that's the last thing you want. You're putting this in place so that your loved ones can get that money within days, within a few weeks, so that they've got the money in place to keep the bills being paid, to keep the mortgage being paid. Can you imagine if that money is not available for months or indeed in excess of a year, then the stress and the implications could be extremely serious. So by the money being in a trust, it gets paid out within weeks because it's not deemed part of your estate. So the life insurance company will just release that lump sum to the beneficiaries, as I said, within weeks. So fantastic news. That's one reason why it needs to be in a trust. Second reason is about saving money. If you or if there's a claim that needs to be made, and again, you've got a lump sum for this life insurance that could be many hundreds of thousands of pounds, and it's not in trust, then again, as I said earlier, it goes into your estate. So that's going to bump up the value of your estate and could easily tip the estate into and above the threshold for inheritance tax. And so all of a sudden, any value of your estate in excess of the inheritance tax levels would be taxed at 40%. So by having the life insurance in a trust, again, as I said a little earlier, takes it out of your estate and therefore is not counted towards inheritance tax at all. So it's a very clever but yet simple way of ensuring that should you be close to the inheritance tax bracket, that it keeps you below that for much longer. You don't pay any tax, and therefore all of that money goes to your beneficiaries. Again, we have advisors who can advise in this area. If you're unsure, happy to have a no obligation chat about it, and indeed even put a trust in place for a life insurance policy that's up and running. You don't need to necessarily stop and restart a new policy if that's something that worries you. So if unsure, have a chat, and we'll try and get the mist to lift and advise you in that area. Finally, to wrap up, here's a list of all the services that we can offer as a company. The usual suspects are on there, but we also do advise in commercial mortgages for those that didn't know, as well as development finance if there's properties being built, holiday lets, of course, and auction purchases. So again, if anyone wants to have a chat further about any potential projects that they're looking at, then we're happy to help. And here's all the ways to get in touch. So if you want to email, you're more than welcome. if you want to ring the office, or right at the top there, if you want to cut and paste that link or type it into your browser, then you can, you're more than welcome to arrange a consultation with one of the team, and we'd be delighted to try and point you in the right direction. Other than that, that's our mortgage update for the month of August. Have a great day, and hopefully we'll speak to you soon. Bye-bye.